Hello everyone, today is Friday, July 24th, 2020. My name is Evan and welcome back to another market recap video. Now, if you're new here, welcome. We break these videos up into two parts. In our first part, we talk about everything that went on this week in markets. We're going to look at performance, market internal sectors, volatility, and really just pick apart everything that happened and point out everything that stands out. And in part two of this video, we're going to jump into the charts. We're going to look at those longer term trends. We're going to fit everything we talked about in part one into the broader market context and direction and really just try and make sense of everything that is happening. So hopefully that sounds good to you. Let's jump into today's analysis, this week's analysis. We get two big headlines we're pointing out here. First is on the Nasdaq. The Nasdaq had its first back-to-back down weeks since March, since effectively the recovery started in March. Now, the Nasdaq has been our market leader. It has covered a tremendous amount of ground to the upside here, and these two down weeks that we've now seen in a row barely scratch the surface in terms of anything meaningful of a retracement or a breakdown. All of the trends by and large are still bullish, but everything has to start somewhere, right? If we have a pullback, shallow or large, it has to start from some point, and we at least are observing here that we finally have some signs of the market kind of stalling out, going sideways, pulling back, and at least creating some doubt here in that bull case. As earnings season picks up, we started to get the initial wave of tech earnings this week, but really it's next week where we're really going to see a lot more of those NASDAQ companies start reporting. So it'll be very interesting to see the follow-up to this behavior. The second headline here is on silver. Silver reporting one of its best weeks in decades, a very strong move to the upside over the course of this week. It had another very strong week earlier this year in about March after it got really sold off aggressively in that slide lower in the second quarter, and it's now kind of making that second move really exuberant. We're going to talk about that a little bit later as well. So let's jump into the performance here. We'll start with equity markets. If we look at the right column here, this is the 1 week performance. You can see all of the U.S. markets here, S&P, NASDAQ, Russell, all red here on the week. The world stocks, so minus the U.S., actually outperformed just marginally, but managed to hold on to flat territory, slight higher over the past week of trading. And again, the NASDAQ here is the notable dog to the downside, down 1.5% versus the Russell and the S&P, which were trying to keep things together. Now, despite that, market internals actually improved quite a bit here, particularly on that first row. And I think this is notable here, but the number of stocks making new 52-week highs this week, we got almost 500 stocks aggregate on the week. So we count up all the number of the net 52-week highs minus lows each and every single day. Again, Friday's numbers are always rough estimates because I record so quickly after market closes. I don't have finalized data yet. But generally speaking here, almost 500 names, that's quite the improvement from the last couple of weeks. So we are seeing more stocks hitting new 52-week highs. That's a good sign of breadth overall. Doesn't necessarily speak to the very short term, but it does give us a little more hope, confidence there on the longer term. In terms of the AD line, you can see it did close it positive on the week after all was said and done, but really nothing too notable here. No tremendous strength one way or the other, just a more kind of neutral reading. And the percentage of stocks above a 20 SMA for the S&P 500, about 75%, so still running pretty hot there, or I guess on the bullish upside reading for that particular statistic. Now, if we get into sector performance, it's a very mixed picture. It was almost right down the middle again. We've had 5 sectors to the downside. We had 6 on the upside. Top performing sector this week was energy, followed by consumer discretionary and financials. And on the downside, we had technology in last place, communication services, and healthcare. So really does depend on where you were trading this week. Your individual stocks certainly mattered on whether or not you made money this week. Now, if we look at VIX volatility term structure here for the S&P 500, there's really no change across the curve here. The VIX basically closed exactly where it was last week on all four time frames: the front month, the 3 month, the 6 month, and the 1 year. Really nothing notable to speak of. You know, we had the S&P down. I mean, we had, generally speaking, markets down this week. So so for the fact that the VIX didn't go, you know, kind of rip roaring to the upside, probably could be seen as a mild, you know, constructive, positive behavior there, but that's reading very thinly in between the lines. Now, in terms of credit markets, here is actually a pretty constructive week as well. LQD, JNK are two ETF bond market proxies for high yield and investment grade. Both returned positive performance this week, and that was pretty constructive. So there's no real warning signs here. We're not seeing credit start to roll over or any type of uncertainty here. We're in fact just kind of seeing almost the opposite, where there's still a good amount of liquidity here, and you know, life looks pretty good in terms of what the credit market is saying. If we look at yields, well, this is where things get a little more interesting, because we still have yields going down, which means bond prices are going up. And so that means you're still having the safety assets of the world continuing to move higher. And when you throw gold into the mix, take a look here at this number, 5% on the week, is still basically saying you have some conflict of signals here, where you have, you know, equity markets were down, but fairly mildly, almost flat, but yet you still have kind of bond prices and gold continuing to just really rip to the upside. At some point, something will have to give, and we'll continue to obviously monitor it. And I think when it starts to happen, we'll pick it up pretty quick here when we do our analysis that we do in these videos. Now, silver, though, this is the monster move, 17.64% just in this week's time. And then look at the monthly performance, 28%. So this has gone to pretty extreme sentiment here, pretty extreme readings really quick. We've had a bullish outlook on silver for some time, so this shouldn't be a surprise that silver is heading higher. It should be a surprise at just how fast it is heading higher. I think that is the real surprise. If you've been watching these videos, you know that we've had our bullish trend outlook here on silver for the past many weeks. USO oil also closing in positive territory. So when we take everything in aggregate here and take a look at our report card, we get a solid B for this week's performance. Of course, equity markets suffered a little bit there, as we were essentially red across the board, but market internals, risk sectors, credit markets, all of that actually held in pretty good. So it's a pretty constructive sort of pullback. At least that's the way I would frame it at this time. Now, finally, we've been ending with our Merlin strategy allocation on a week-to-week basis. You can see it, in fact, we actually did raise some cash this week, and that was because we simply had some profit targets getting hit. So we were able to scale out some profits. I actually had a pretty good week here for Merlin, and we do have some new signals on deck for Monday. So as a reminder, if this is interesting to you, and if you guys want to take this for a free trial, we do have 14-day trials available. You can get it at the link showing up there, or at thetraderist.com/Merlin. So that is it here on part one. We'll be back in just a moment with some charts. All right, we're back here. Let's get into it with TC2000. We've got our equity grid open. We have our custom smart trend filters applied to each of these charts, which are the colored dots. We have price itself, which are the white dashed lines, and we are currently looking at a weekly time frame picture on all of these charts that you see. So let's start with the top left here. This is the S&P 500. Again, you can see down slightly here on the week, but still above a bullish indication here on our smart trend filter. So we know the benefit of the doubt here on the weekly time frame should be given to the bulls, and there is basically no change in outlook here. This is all the same as it's been for the past handful of weeks. In the top right, we've got the Nasdaq 100. Again, you can see down 1.5%, but still quite extended from its trend filter here, which is bullish. It has been bullish for some time. So again, we can look at this as an opportunity here, frankly, way as the Nasdaq kind of comes back and dips and pulls back. This is still bullish trend, and it is starting to retrace a little bit from these frothy levels. Bottom left is the Russell 2000. Once again, bullish trend here as well. Hasn't quite taken out the June pivot high like a lot of the other markets, individual stocks and indices have done, but it is still got a bullish reading here as well. So the Russell 2000 is potentially at a spot where it could benefit from some rotation, especially if money continues to rotate out of tech, or it continues to rotate out of tech. We'll see if that happens, but for now, no real change in the outlook there. Bottom right's ACWX, you can see taking out that June pivot high, bullish trend reading, pretty much flat on the week, no real changes to speak of. If we go down to a daily chart of our trend filters, you can see the S&P 500 with the pullback, again, still getting closer to our smart trend filter line, but still bullish. Nasdaq is what I want to talk about, because you can see with the Nasdaq, we are finally getting below the trend filter, and in fact, we are getting back to that neutral rating here. So our filters are designed to reduce whipsaw as much as possible. So it's designed to be a smarter way to sort of trend follow markets. The usual thought process here when I'm looking at these is that the benefit of the doubt goes to the prevailing direction. So in this case, prevailing direction is green, is higher, is bullish, and therefore just because we're in neutral now, I still want to give the benefit of the doubt to the buyers down here, but that does certainly mean that there's some mixed signals, and it's time to pay attention, maybe a lower time frame, or whatever that means for your specific outlook. So NASDAQ, that is interesting. We're going to follow this next week, and we'll see if we finally get a bearish turn down. Remember, we haven't got a red dot printed here since really April. We had this one little kind of failed signal or false signal down here. Really, it's been since the big slide in the first quarter was our series of bearish plotted dots. We haven't got anything close to remotely that since that time. So let's pay attention to this into next week. Bottom left, I also want to point out here is because the Russell 2000, remember this went bullish trend last week on Thursday. Sorry, 2 weeks ago. That would be that would be the Thursday of the 16th. And it continues to hold bullish trend. It's starting to almost come back here and starting maybe to test it early next week. So we'll want to pay attention to it. But still, for now, we should expect higher prices there for the Russell 2000. Bottom right's ACWX, no changes at this time. So let's dive into some of the price action here for the S&P 500. We're back to this grid here, which should look familiar if you're tuning into the recent recap videos. This is the same way we've been kind of framing out the market here, with the 3130 to 3140 area, and then the highs here from June, which come in right around 3233, 3235. That's been our top level. And what we do see happening here, based on the action on Thursday and Friday, is that we have now rejected or fallen back below this June high pivot. So this is a point where you do want to certainly take some notice. A traditional kind of supply demand price action analysis here would have you kind of thinking that you want to be open-minded here, or at least aware of the potential transition and the potential failed breakout that occurred this week. So the way we would sort of frame this out now is that it's in the bull's best interest next Monday to essentially get back above this area here as quickly and as swiftly as possible to keep the bullish momentum intact. Now, we talked about, again, from a broader perspective, we still have a bullish reading here on our trend filter. But when we get a little bit tighter and we start combining this with some price action, some bar by bar analysis, we see that price actually is now falling back below this pivot here. So some mixed signals in the very, very short term. It's really going to depend on your trade outlook and how close and tight you're measuring price action. But this is a slight concern here in the very short term for bulls losing this pivot. So let's pay attention to that next week. 3130, 3140, that's the bigger support area that I'd be paying attention to. That, if we start getting back down here, changes the picture pretty significantly, but that hasn't quite happened just yet. So we'll take it one day at a time. Let's see if we can get back above here and then ultimately back over 3280. We talked about the open gap in here and it never got filled. It got into this gap this week, but we never totally filled this open gap in here. So that's still a potential target there on the upside. If we look at the Russell 2000, what you can see here is, again, we talked about the bullish developments here in our past two videos, getting back above 144.50 to 145 area. That is constructive, but again, note here how we did lose some steam into the close, into the end of the week, and given the way this closed on Friday, what we don't want to see happen if you're bullish on this market is follow through back below 145 and to fall back into this old range in here. So again, both of these markets in the very short term have some spots where we want to start paying close attention to see if the sellers do pick up any additional momentum into next week. I'd also point out here just how tight this range is in the Russell 2000. So for the past for the past 8 trading sessions, we've gone in covered a very, very tight range of only, call it a 2% range for 8 days. Sets us up again for some potential range expansion next week. Last but not least, the Nasdaq 100. This is where we've seen some more pressure. Again, because this has had such strong moves to the upside, it doesn't look all that alarming whatsoever. So you always have to keep it in context. What we essentially have here is a new range being developed, call it between... clean up this board a little bit. We basically have this new range getting carved out here between about the low 250s up to 270. We have a kind of a double top up here, or we tried to get back up where we initially, remember where we initially pushed up to back on this candle right here, all the way up into the 270s. That was the swift rejection day. Then we bounced around, we retested it, and we failed again. And now, so the markets are back down here. So the Qs, if we were to use this sort of gradual trend that they've been climbing on, you can see we're getting right back up into this area. This trend is not designed to be precise here. I could draw this in a little different angles, so I don't want to get too hung up on the exact slope here, but you can basically see we're almost back at that general area. So let's pay attention to it next week, and let's see if this continues to sort of spill over into other parts of the market. And of course, it's a super busy week for earnings, so you really have lots of catalysts on deck to move this market around. So it's going to be a very interesting week coming up to see how the market handles everything. Now, if we get back into some other markets here, we go to some of our other screens, you can see our credit ETFs here, both bullish on the weekly picture, daily picture, bullish as well. If we go down to the bottom screen and we look at volatility, it's still on a sell signal, TLT on a buy signal again. And if we go down to a daily chart on both of these, you can see the VIX on Friday started to get back up into neutral. So you can see it's still below our smart trend filter, but it's starting to get back up here and show some cross currents, show some signs that the VIX is getting a little, a little jumpy there on the upside. And TLT on the bottom right still, very much bullish here in this particular reading. Now, if we go to commodities here, you can see gold and silver are the two highlights, the two standouts. These are weekly time frame pictures. And again, this is what I was talking about at the beginning of the video. I don't think gold and silver closing higher should have been a surprise to anybody. We have had a bullish outlook here on both of these commodities, but the speed and the surge of this week is certainly what was surprising. Take a look at the gap here in our trend filter. So you can see when there's big separation there, that's telling you that there's quite a good amount of urgency and momentum being picked up there. And look at silver, especially on this one. Look how much separation there is. Now, again, that is a constructive thing from a longer term perspective, but in the short term, it could mean that you are quite extended or overbought, if you want to use that term. If you go down to a daily chart, you can see again the separation from gold and silver this week, and you can see how far price is above this trend filter. So I don't think this is the week where you start, loading up and jumping on board. I think the move has largely happened. I don't necessarily know that the move is over, but some type of pause or reset probably makes some sense there, but some pretty historic moves in both of those commodities. Now, in terms of oil, bottom left, no real change there. Much more gradual, though, just kind of grinding slightly higher as the days and weeks have gone by. And commodities got a little more urgency behind them, but DBC here is still tracking pretty nicely to the upside with some pretty good angling here with our smart trend filter. If we go to the sector grid, we didn't have too many changes, but a couple of notable things to talk about. First is financials. Financials on the weekly chart actually getting a buy signal here on our smart trend filter, which is pretty interesting. That hasn't happened since the beginning of this year. I mean, since before the sell-off started back in February is the last time we had a bullish outlook here for financials. So this is certainly something new here. We can keep an eye on that. And if we go down to a daily chart, and we look at energy. Energy actually had two transition up and two buy signals generated here on just a daily chart, not the weekly. So if you recall, energy and financials, we've probably been the most critical on them. They've been the most beaten up, and I think they're the worst performing sectors this year. But certainly in the short term, over the past week or two, they've gotten enough support to start to transition back up. So let's talk about those markets, and actually let's look at a couple individual stocks that reported earnings real quick. So for financials, again, on the weekly picture here, you can see trying to stick this higher low around this 2270 level, and we were pretty clear on this area here from a few weeks ago, this 2270 level. We posted some charts on social as well, but this was a key day here on this 3.5% day. I think we discussed it. We talked about the gap being held. This was right before the company started to report earnings. Again, financials still a very iffy spot for them in general, and I do want to point out just how tight this price action is here on the past 7 days. So this really could swing either way. If you want to look at that early signal on our trend filter, it is pointing to the upside now. So the benefit of the doubt there in the short term is that this breaks to the upside. Doesn't mean it has to. It just gives us an early indication, gives us some context that that's the direction that the trend is looking towards. And finally, or secondarily, is energy. Energy here again in the short term, in the daily chart, is actually getting that buy signal as well. This has been a real rough spot. It's trying to put in a higher low here, and I would say, if it can start to get over 38.30 and start making some more closes over 38.30, 38.40, then this is a better looking sort of bottom here for energy. But the jury, it's still a little bit of a dicey trade here. And look at these inside bars getting printed 3 days in a row, or not all inside days, but you see the tight range that I'm referring to. So let's keep that in mind into next week. Last sector I want to talk about is consumer staples, because this was a trade idea or a mention last week's video. We talked about the just this bullish range in here, or just the range that was really developing in here, and then the fact that we were starting to break out to the upside of it. This is a holding that we've had. We did hit our first profit target this week, so we did scale some profits in XLP. We've been in it for quite some time. We still have half a position on in this particular market, but XLP, after 3 months sideways, starting to break out to the upside there. So I think that's notable. We talked about that last week. Last two names I want to talk about is just Tesla. Tesla reported earnings this week, and you can see down 6.5% on Friday, had a bearish engulfing day on Thursday. This was the earnings day for it. This has been, just an absolute rocket ship monster to the upside. There's no new surprise there that we're breaking, but I just wanted to point out and overlay our trend filters on here, is that you can see this is the first time in some time where we're getting a yellow dot printed. We broke below the trend filter for the first time really since all this started to work itself up. So the official sort of first green dot buy signal for Tesla here was around 545 or so, and it's basically been printing green and yellow all the way through, mostly green, but you can see we finally starting to see some cross currents here. So I think for Tesla bulls, if you want to keep this momentum train alive, you really need to see it back over about 1450 or so, and we'll see how that shakes out next week. Last but not least is Microsoft, also reported earnings this week, starting to kind of consolidate and pull back a little bit. Again, a well-deserved pullback after the ground it's covered to the upside. It's a huge component in the Nasdaq and in a lot of ETFs generally speaking, but you can see kind of transitioning back down into neutral with our trend filter there, and we'll be interested to see how this ends up shaking out into the coming weeks. So that is, I think, everything that I had for this week. Covered lots of ground there. Remember, it's still earnings season. We got some markets here that are in some pretty interesting spots. So let's pay attention closely and manage risk. That's the job, I think, as all of us with active trading or active investing. So hopefully you guys are doing great out there. Thanks as always for tuning in and watching. Every Friday we do our long form market recap videos like this. Tuesdays we do our midweek shorter versions, and Wednesdays we send out and share some swing trade ideas. So be sure to subscribe to our YouTube channel or follow us at The Trade Risk. Have yourself a great weekend, and we'll see you next week.